Welcome to the Recon Trader. In today's video, I will share some tactical analysis with you over on the Bitcoin chart. We are definitely under red alert conditions as Bitcoin has been selling off over the past couple weeks, and given confirmation of a few other signals, there is the possibility this sell-off could continue. Now, with that being said, I will also take a look at the possibility if the bulls decide to step up and join this battle, what obstacles they will have in their way to get back towards the top side. Now, before we get into the charts, we will jump over here to viewbase.com. That is where I get my intel as far as the upcoming expiration of options. And the options that are expiring at the end of this week also are the end of the month expiration for the options, and that is for February 25th. And so if we give that a click, we can see that the calls have approximately 2 million on the line and the puts currently have 14.2 million. And so the interest on the puts is much greater than the interest for calls. And if we look down at the actual strike prices, a strike price that stands out to me right now is this 39,000 strike price. There are basically $0 worth of calls at this level, and there's just over $800,000 worth of puts at this strike level. And you can see we skipped the 40,000 strike price and we jumped to 41,000 strike price. There's still very little interest there on the calls. However, the puts do have almost $1 million at the 41,000 strike price. And then from there, the puts just get heavier. At 42,000 strike, we're looking at 2 million. 44,000 strike, we're looking at 1 million. And the 45,000 strike level, we're looking at 1.3 million. From what I can see, there's a wall of resistance basically starting at around the 39,000 strike price. And so the Bitcoin bulls really would have their work cut out for them if they have any hope of pushing this price up above 39,000. In theory, we could see Bitcoin closing the week below 39,000 this week. Now, on the flip side, the 36,000 strike price is where I actually see the calls have almost 1 million stacked up there, versus the puts have 200,000. So on the downside, the 36,000 level is what I would really look to hold. If that level breaks, then the next level would be the 35,000 strike price. After that, it's pretty much open air on the way down. And so at the end of the day, the bulls on the call side want to see 36,000 hold, and I think the bears on the put side would definitely like to see the price close below 39,000, perhaps even below 37,000. So with that all being said, we'll jump over here to the charts and we'll start out on the 1 week candles for Bitcoin. And in my previous video last week on Monday, I had mentioned that the candle right here that closed the week before was a shooting star, which is a bearish candle. And I mentioned in that video on Monday that we really needed to see confirmation, so we'd have to wait for the close of this most recent candle that closed yesterday on Sunday. And actually in the middle of the week, the bulls did step up. You can see a nice wick towards the top side. Unfortunately, some of you all forgot that you need to wait till the end of the week on this bullish push towards the top side, and you basically said this shooting star candle was invalidated on like Wednesday, and I did answer some of those comments and suggested you wait to the end of the week. And had you waited to the end of the week, you would have seen this bearish signal actually played out, and the price ended up selling off, and we got a big bearish candle towards the downside. And this type of price action, a shooting star followed by a sell-off, is a very strong bearish signal. Now, this week's candle did actually start off towards the downside. However, today it is trying to push up. So let's drop in the Fibonacci and some support levels and see where we would be looking for support if we want to see this price move back up. And right now, the first level that's coming into play is going to be the 786 level on the Fibonacci retracement, and that's putting us right around 37,400. We did wick below it on the current candle. However, the price has rebounded a little bit and has moved away from that 786 level, but the previous level of support I was watching, which was 39.6, which you saw as support here. We also saw it as support back here if we check our 6. It has now turned into resistance. So the first level the bulls need to get back above, it would be 39.6, and they've already failed once at pushing up. So it will be the first level I keep an eye on towards the top side. So the first level towards the top side is 39.6. The first level towards the downside is 37.4. Now, if the price can get above 39.6, the next level we're going to look at is the 618 level, and that puts us right around 44,000. And for me, I'd be looking more at a zone between that 44,000 and basically 45.5, where we have seen a few different rejections in this zone. So this would be kind of a kill zone. I would want to see the price get above. If the price can breach up above 45.5, the next level to look at would be the 50% level on the Fibonacci's, and that's going to put us right around 49,000. And in reality, 49,000 to probably around 50,000 is going to be another one of those zones. That would be a difficult level of resistance for the price to get above. Now, on the flip side, if the bears continue to push this price down as they have over the last couple weeks, and get down below the 786 level or 37.4. The next level I really see for support would be around 36,000, which would be at the bottom of the wick of this candle and kind of at the bottom of these two candles here, not including their wicks. Now from there you can see these candles wick down to around 32.9, and that would probably be the final line in the sand. If that gets breached, then we're probably more than likely looking back at 28.8, which was the low of the previous sell-off we saw. And so with that being said, if we take a look and just measure from the previous all-time high down here to the sell-off, that was around almost 56%. And if we take a look at the most recent sell-off from the current all-time high down to the current wick, that only puts us at about 52.5%. If we actually sell off similar to say around 56%, that would put us right around 30,000, maybe 30,350 is what the actual level would be, but 30,000 might be a key level. And again, that's pretty close to this 28.8, and 30,000 is actually pretty much in line with the bottom of this wick and also this wick back here. And so it's very realistic that this was not the low of this dump. We may see a retest of that 30,000 level and then perhaps a push back up towards all-time new highs. Now, if I drop in my EMA ribbons, again, we can see where the shooting star candle basically got up into the ribbons, rejected back out. Again, last week's candle did push up into the ribbons. However, it rejected pretty strong and closed much lower than the ribbons. And so in reality, the real test is, can this weekly candle get into the ribbons, or better yet, above the ribbons? If we get another close below the ribbons, we may start to see the ribbon flip. Now, if the ribbon flips, that's extremely bearish signal as well. And what I mean by flip, if we see the greens and the blues end up on the bottom of the ribbon and the reds and the yellows on top, that would be, again, a very bearish signal. And right now, the first couple green EMAs are starting to push down below the blues and touching on the yellows. And so that flip on the EMA is starting. If we don't see a push towards the upside, the EMA ribbons will be in danger of flipping, and then we could be headed into a very long bear market. Now, one other thing I want to point out is the 120-day moving average, which is the white line you see moving up through the bottom of the chart. If we look where that comes in at right now, right around 29,000, or that 28.8 level. And obviously the last thing we want to see is the price get down below this 120-day moving average. So I think that's enough jaw-jacking. Just wanted to do a quick video. We did get confirmation on this bearish shooting star with the close of the most recent weekly candle. And so again, we still have bearish confirmation. However, it's pretty obvious looking at the current sell-off. This might have just been a dead cat bounce. So if anything changes on the charts, I'll do an update video. You might want to shoot that subscribe button so you don't miss any updated videos. Also, if you like this video, do me a favor, spike a like. If you have any questions or comments, drop them in the comment section down below. And until next time, remember, never send your money into battle without first doing your recon. See you in the next video.